G'day folks, welcome back to another update. Today we're looking at Bitcoin and Ripple again. Now the downside risk is still there. Still the momentum is going more to the bearish short positioning. So avoid buying at the moment if you can help it and wait for the signs to turn up. We're going to include some back testing to show you the results of trading in the short positionings, at least where it is at the moment. Also, don't forget, before we get into the analysis, if you have questions around these daily videos and reference the +1 videos, which are identified by the +1 symbol, which break down these daily videos into a simpler language. Okay, I'm not going to go into detail into this chart, apart from looking at the various fundamentals and outlook for both Bitcoin and Ripple, other than to say that Bitcoin is near-term strength compared to Ripple. Bitcoin's scarcity and ETF inflows create stronger bullish pressure, whereas Ripple mid-term fundamentals are solid. Long-term adoption story remains intact, but upside may be more gradual compared to Bitcoin's explosive cycle. So first look at the long-term trend. So even if you're trading on the 1 hour, we always look at the higher trends to see the overall direction. And as you can see here on the weekly chart, the price is well above the moving averages, although notice the CCI is dropping off. So I've got lower highs on the CCI versus high highs on the price, and it's a bearish divergence. Now it's starting to pull back. It may actually hit its target range, and that target range, if we draw a Fibonacci from that high to that low, would be in that 23-38% range, identified by that little rectangle there. So that's a minimum retrace. It could just touch it and bounce off that, or it could actually fall a lot further. We can't tell exactly how far. That's why we look at the smaller time frames to get an idea of where it potentially may retrace to the upside again. But at the moment, somewhat neutral positioning on the weekly with a bullish move on the price but a bearish move on the CCI. On the daily, bearish momentum on both the price and the CCI, both are below the moving averages, and I've drawn a down arrow there. That's where you would have started taking short trades on the hourly if you're trading the hourly. But again, notice back here we did have a double top on the CCI versus high highs on the price. That actually went a bit higher to that point there. And if we were to draw a Fibonacci range from that high down to that low, that would have been, again, the 23-38% range, which was penetrated, you can see, with those candles there in those few days. So that's already been hit, that target range, but notice the CCI is still dropping off. So that's, don't go buying anything yet. We'll wait for these to turn to the upside. On the hourly, before we go to the back test, again, going short from this period, what we look for here is, if you're trading on the hourly, we'll look for any divergence. So if you were trading during this period, you may have wanted to get out of that little trade there, because that started to break up higher. Now, in this case, we would have drawn a Fibonacci from, let's do that again, from that point to that high before that divergence started. You can see it already broke below that, up through that 23-38% range. And what I've done here on this previous Fibonacci, I've taken it to that level there. That's at 23 on the high level. Now that kept falling, but notice the price kept falling down there, and I would have extended that to that level there. And the CCI kept rising, and that eventually broke through that secondary 23-38 range if you're following that wider bullish divergence. Now since then, the price is now broken to the downside, and so is the CCI, and that's now moving in tangent. The CCI is moving in tangent with the price, is what you normally want to see. If you go to the back test, look at the 1 hour time period here. Let's get rid of this divergence, this Fibonacci for a moment. So what I've done, I've started the short positionings from around about the 18th of August, which corresponds with this one on the 1 hour time frame. And you would have taken short trades here using the CCI14 strategy, but also following the moving average movement, taking shorts when the CCI is below the moving average, and so is the price, but also taking a downward momentum on the CCI14. So there's about 3 different indicators you're following there. Again, note strategies in the description below if you want to learn how to trade that. But here this would have generated 4 separate trades, and if you're trading each of these, it would have generated about 3,700 trading Bitcoin on that range there going short. But again, always pay attention to these divergence, and you would have closed out your first position at that point, and there was nothing running at the point anyway. Then open up another position there again, and then follow the same pattern. So XRP2 is showing a potential bearish momentum on the daily, but first off on the weekly, the price is still above the moving average, although the CCI is dropping off similar to Bitcoin. You can see there's also a bearish divergence on the CCI 150 compared to the price on the weekly, and that's creating a little flag there, so we might see a break to the downside there possibly as well. Now on the daily, again, as I said, it's a bearish momentum, and I've drawn a down arrow there where you would have started taking short trades during that period with the CCI consistently below those moving averages, with the exception of that little spike there. So bearish momentum on the daily, which means you take short trades only on the 1 hour time period. And what we're looking for now is also any divergence. Back here we had a bullish divergence. Now this actually extended lower since our last video we did, and you can extend that as well. Now from that point, creating a Fibonacci retracement, going back to that significant high, you can see there it broke very easily through that 23-38% range, and it's gone up as far as the 50% range before pursuing further downside pressure on the 1 hour time period. So at the moment, short trades only. Let's go to the back test. And again, going short from this period around about the 1st of August, as indicated here on the 1 hour chart. You would have taken short trades only. There's quite a few in there. Now we're trading here $5,000 lots of XRP shares using the CCI1500, the CCI14, and the moving averages on the price chart. And again, always follow the moving averages. Again, it's nice to zoom out. I like to zoom out in a 50,000 foot view at this point rather than zooming in. When you zoom in too far, sometimes you focus on the bug on the windscreen. I like to zoom out a bit so you can see the road in front of you. And here you can see going short, you would have gone short during these periods. Avoid going short during those periods. Going short again, avoid going short or close out your positions with a profit if you can. Going short again and wait for any turn to the upside. So here, if you had to let it run through the whole period with a baseline of 100,000, that would have generated about 100,324 in revenue trading $5,000 lots of shares. So don't forget to reference the +1 videos, but also to support the channel more, go to the Pete's Investing Patreon page, where we look at weekly bullish shares and cover stocks throughout the week. Thanks for watching. Hit that like and subscribe, and we'll see you in the next video.